Hi and welcome to The Harvest. I'm Carmel Fisher. In today's episode, we're looking at key takeaways from Lynn Martin's interview with Ed Barron's. Now, Lynn Martin is the NYSE President, and she uncovers valuable insights for us in terms of welcoming companies from foreign markets, looking at the strong pipeline of companies looking to tap into the capital markets, as well as rampant China company delistings and the way forward for them. Looking at her insights in terms of the economy, consumer spending, how the NYSE is planning to deploy AI, and what that means for human capital. Stay tuned.
So really strong start. Big deals getting done across multiple sectors. I'm very optimistic that we're going to see more deals come to market. We've had a few in February. We're gearing up for an active March, April, whatever the case may be. Very strong pipeline of companies looking to tap the capital markets. You know, the biggest challenge, I think, with the IPO markets has really been sponsors getting their heads around the new valuation. 2022, 2023, the markets reset. Companies are looking now, though, at tapping the U.S. capital markets as really an efficient way to raise capital, finance their operations, and importantly, to raise the capital that they need for their next great product, their next great idea. Acquiring businesses. There's a certain currency that comes along with being a public company. So I'm really optimistic that we're now at the point where companies are looking to tap. Well, over the last couple of years, specifically 2022, 2023, you didn't see a lot of direct listings come to market. Prior to that, though, we pioneered the concept of the primary direct listing. I think we're going to see some more companies with the well-known brands look to use that vehicle in the future. But given that we're still in the reopening of the IPO markets, you're probably going to see them fewer and further between, at least for 2024 and possibly 2025. Our U.S. capital markets are the envy of the world. There is no more efficient place to raise capital than the U.S. markets because of all the dynamics I talked about earlier. The breadth of investors, the deep pools of liquidity, the transparency that comes along with being a U.S. public company. Other nations would love to have that position, but they don't. Companies turn to the U.S. Importantly, there's the PCAOB audit piece, which adds that transparency, which has now been figured out. I was very pleased to see at the end of 2022 when the companies that were listed in the U.S., headquartered in China, found a path forward, passing their PCAOB audits, which I thought was a good thing for the capital markets. And now that there is a path for a company to go public, I think you will continue to see companies go public out of China. One of the things we've been focused on over the last 2 years is to build bridges for commerce. So we've signed 6 memorandums of understanding with other exchanges. So I think about TSE, for example. We also signed with Johannesburg Stock Exchange in Indonesia, more recently, Abu Dhabi. Companies operate around the globe. So our role is to ensure that commerce continues to flow freely. What has really helped bolster the U.S. economy is the strength of the consumer. Consumers are spending. They may not be spending on any one given area at a certain time, so they may not be spending on clothes, they may be spending on vacations and vice versa, but consumers are spending. And I think that is a very optimistic sign, and it shows the overall health of the U.S. economy. AI is the 2 letters of last year and this year, and who knows how many years to follow. But we've been using AI or large language models in our processes in 2 different ways. First way is clearly to add efficiencies to our processes. It doesn't mean doing things with less people. It means doing more with the people that you have. Enabling the people that you have to harness data, to use data effectively, given all the data that is in the world, and then put the human intelligence on top of it. We've had something in production, a large language model in production, that has driven transparency in our energy market. However, and if we look at volumes generated through that mechanism, they've grown by about 70%. So it means the humans are using it more and more to add efficiencies to their trading processes, to add transparency to our energy markets, to continue to do that higher value add type stuff that I was just talking about. If I look at the messaging rates that come through the exchange, now a message as I look at it is someone buying, someone selling, or someone saying, I'm going to hit the bid or the offer. The amount of messages that we process is almost 750 billion messages every day. No human being, no group of human beings could handle that type of messages unless you had good technology. But importantly, in fast-moving markets, when things get really volatile, if you don't have a human smoothing the volatility out, you're going to have bad outcomes. You need to have that human element to really put that reactive judgment and their years of experience into the data that is coming out.